I'll go back to the premise that I still believe and have believed for the last 20 plus years that if I can make 1% a month on my money without losing money, I am very happy. If you can do that consistently year in, year out, year over year, I think you will be a very happy individual. It's when we start changing all the parameters to try to bump up returns that we get into trouble. And that doesn't mean that you aren't going to make more money than 1% a month. It just means that if you set a benchmark that's attainable, attain the discipline, it becomes a lot easier to get where you're going. So capitalizing on sector trends up or down, we have to define the trend, which we'll talk a little bit more about tonight, patterns or trends, which is where we're going to spend a lot of our time tonight, and then divide the market into sectors. It's easier to find trends, patterns, and disparities within sectors than it is in the market as a whole, because you're always looking at the market in its breadth versus the market in its parts. The parts tell more than the whole, and the whole is made up of parts, so the parts are really where we spend most of our time on a day-to-day trading basis. Building, defining, and implementing a disciplined strategy really is what it's all about. So let's dig into this and look at what we're going to look at tonight. This is just our scatter graph for the leaders. This was run today, so I mean this is current. And the fact that this is the S&P 500, this goes back to the August 7th low, brings it forward through whatever time it was there, 1:40 this afternoon when I ran it, and it didn't change a whole lot going into the close today. But there's things on this that to me are important, and that is that you can see here that the S&P is flattening out, in that you've got a little bit of a transition in the last couple of days. You can see here that you're flattening out in healthcare. We've been flattening out for 3 days within the consumer services. You can see that the yellow, which is XLP, is flattening out, XLB, XLI, and you can see that the only real moving pieces in this have been the fact that we've gotten a move up in utilities and a slight move down in financials and a slight move down in telecom. And what you're seeing is that the market's leadership on the upside really came from here, which is healthcare, and it also came out of the consumer services component there, and then you got somewhat out of financials. And then you had an additional run here in the industrials, and then they actually flattened out after that. So the key to me is finding the leadership within the market and then defining within, and now we're obviously looking at a micro trend of the market because we're only looking at 3 weeks of the market, but we got to stretch it out past 13 weeks or 90 days in order to get to a short-term trend. So most of you are going to, this is a generalization, I won't say most of you, but some of you are focused on only micro trends. In other words, you're looking at the market in a 90-day window, and you're trading off the short term, whether you're swing trading or day trading. That's really where your focus is. And don't get caught up in that, because you still need to step back and look at the longer-term trend lines, or else you're fighting yourself sometimes in how you see the market. So the key to me is trend drilling is to look first at the broad market, whether it's trending or not, define what is leading the trend, and what we just looked at there in the S&P 500 is that we can always broaden that time zone, and we'll go back and look at a chart in a second, and we can compress it or lengthen it, and we can look at the leadership as to what it is. And right now it's technology, consumer services, and healthcare. Biotech is leading healthcare, and then we could dig into the biotech sector, and we could find stocks like Celgene, which are leading the biotech sector. So you can start at the broad, you can dig to the bottom, but the key is to find the trend and then trade within the trend, because that really is what sets the pace overall. So, what I'm looking for, if we go back to this chart, and let's just look at the S&P 500, and there's your trend line. Let's go back to a daily chart just so we can get a narrower view. And you can see that here's the August 7th low, and the trend that we're talking about just now, that trend really is a matter of right here, and that's the trend line. And now I added to this chart a 120-day regression line, or 120 periods, because the regression line, when it's on the chart, will automatically let you see the trend relative to the last 120 periods, which is 120 days on this chart. But there's the short-term trend, and that's what we're looking at. Now, the last 2 days, you can see we've had a little bit of a shift right here on the downside. You've had 2 doji days here, and that's going to be interesting as we go into tomorrow's trading day, because we end not just the month of August, but we're ending into earnings, and we're ending into a lot of issues relative to September historically being a month that doesn't favor growth. And so what we're looking at is whether or not this is going to top out on a micro trend basis